Hey everybody, I'm coming to you today from the shelter and shade of Goldstream Provincial Park, trying to escape some of this summer heat. I hope your summer's treating you well. And I wanted to answer the question, what the heck is going on in the Victoria, BC real estate market? These are unprecedented times and a shift is occurring as we speak. More of a rapid shift than I've ever seen in my career in real estate, and how I would normally define changes in markets. Feels a little bit like a ferry or large ship changing directions. It takes a little bit of time, and then eventually we get into a new market and a new normal. Real estate prices are a little bit sticky. It can take sellers a little while to get used to new prices and or changes in the way people are buying and selling real estate. But this time around, it's happened in what feels like someone slamming the e-brake and pulling a full 180, because in the course of 4 months we've gone from a 0.25% overnight rate from the Bank of Canada to a 2.5% rate. There are a number of things shaping our real estate market at the moment, and we're going to get into those in this video. In my mind, there are three main reasons why the market is changing as quickly as it is. And reason number one, fittingly, I'm in Goldstream Provincial Park. The campground is full. People are just enjoying the summer once again. It feels like it's end of the pandemic. And once again, we've got beautiful weather. People are exploring, adventuring, spending time with their families, and enjoying our beautiful country in the summer. So I do not blame them for maybe shifting housing and purchasing a home a little bit lower on the priority list. Our seasonal sales in the summer do drop a little bit compared to the craze of the spring. So it is quite normal that we see a little bit of a decline in housing activity through July and August. And reason number two, which I touched on a little bit in the introduction, as well as in my previous market update, a huge change to mortgage rates and lending affecting people's purchasing power, what they can qualify for, as well as what they can sustain on a monthly basis. That's been brought on primarily by our central bank putting their foot down on inflation, which they fear could become entrenched in the eyes of the Canadian consumer. Our most recent print was 8.1%, up slightly, but below expectations from last month at 7.7%. And we will have to see how much conviction they have moving forward. I think my expectation of their conviction level at the beginning of the year was a little bit underwhelming. Just because I wasn't sure our central bank was willing to put us into a recession at the consequence of reaching their 2% target rate for inflation. It seems that that is not the case, and that the central bank is willing to do whatever is required in order to get us back to that 2% rate. They're talking about reaching it by 2024. So what does that mean for mortgage rates, lending, and what the average person is dealing with? Well, with the most recent and whopping 100 basis point move, it's moved the ranks up on a variable mortgage to 4.2-ish% from most major lenders. The other effect that that's had is on any lines of credit or HELOCs, which are affected by prime, as well as what people can qualify for because of our stress test. For those of you that are familiar with our mortgage stress test in Canada, it is either 2% higher than your contract rate or 5.25 at a minimum. So we saw a lot of people shuffling into variable mortgages as a consequence of the discount we had between variable and fixed at the earlier part of the year. Now that isn't as much the case, and the other factor is people are now being stress tested at 6.25%. So from the moment that decision came out last week, we've seen borrowing power reduce by about 10%. Some positive news in mortgage land. For those of you that follow the 5-year fixed mortgage, you will have seen the 5-year government bond yield come off in the last month. That is effectively what prices those 5-year fixed mortgages, which have stabilized in the last few weeks. So for those of you looking at watching the trajectory of where those 5-year fixed mortgages go, just watch that bond yield. I'm not sure if I can say they've peaked out just yet, but because recession is now being priced in, many of us are starting to feel like we've reached the peak of those 5-year fixed mortgages. And reason number three, a complete shift in buyer sentiment from the earlier part of the year. Back then, feels like a long time ago now, it was the ultimate FOMO market. Folks were clamoring over limited property, historically low inventory, with the urgency that if they didn't buy now, it would be out of reach forever. Whether it was a townhouse, condo, or detached home, they felt like it was their last opportunity to secure property before Canadian housing continued to go up, which it always has in some of their minds. Now, that was not a healthy place for our market to be in, and that has changed considerably to the point now where I feel there are a lot of buyers looking at the headlines: overvaluations in housing, declining real estate prices, bubbly market, all the buzzwords you want to throw at it. That is affecting and becoming front of mind for many buyers and has changed the timeline that they see themselves getting into a property. So a lot of folks currently are looking at those headlines, they're watching videos like this, they're getting a feel and a pulse for the market and saying, you know what, I'm just going to see how this shakes out over the next few months because I think there could be more opportunities for me as 2022 progresses. So how is that beginning to show up in the Victoria real estate market? Well, it's beginning to manifest in the data that I'm looking at in a very real way. From March and April, our average and median detached sale price is down 200,000 in both categories sitting here currently in July. Our 5-year average for sales in the month of July is 808 sales, and currently as of July 18th we had 287 sales. At the midway point we had just over 200, which looks to me like we may have one of the worst Julys on record as far as total sales on the Victoria Real Estate Board. I had to look back to the year 1990, and in 2000 we had 450 total sales in the month of July. So we could very well see a new low record for sales in the month of July in the last 32 years in Victoria, BC, highlighting the fact that there could be a little bit of pain to come here in the short term. Those of you that know me know I'm very bullish over the long term on housing as an investment in Victoria, BC. I think this is one of the most incredible places in the world, and certainly is in Canada, and we shall see how this all maps out. I wouldn't be shocked if we saw rates get cut in 2023, but no crystal ball. Get solid advice. I'm always here to answer any of your real estate related questions. Another thing I should mention, just thinking about real estate and prices here, a Canadian rent report published by Zumper actually placed Victoria as the 4th most expensive place to rent out of all the major markets in Canada, falling in just behind Burnaby, Vancouver, and Toronto. So that is helping to support prices, as is our historically low inventory, which is still not quite over the hurdle, but our sales to active listings ratio has changed to the point of us, I would say, entering a buyer's market as we head into August. Don't hesitate to reach out. Hope you guys enjoyed this update. We'll talk to you soon.